I'll just keep it simple. That's what my mentor taught me also, to be simple. Because it's a simple way of making money on trading. If you're doing any security trading, just like, it's just like kind of, he always says it's like rock, paper, scissors. So relative strength index, RSI, is relative strength index. It's not like a relative strength, but like how a specific category is moving against the whole index itself. Measures magnitude of recent price, average gain or loss over a period, generally 14. Um, gives overbought or oversold signals. Uh, most people consider as like a momentum oscillating indicator. It's a oscillator. It's not like a moving average. So it's like a oscillator. It just basically oscillates between 0 and 100. That's the range. If it's above 70, that indicates the security is kind of overbought or overvalued. If it's less than 30, then it indicates the security is oversold / undervalued. Again, for the folks who are new, security, like, there are multiple, different securities, stocks, bonds, derivatives and stuff. They're all considered as security. So, but there's one more catch to it. There's sometimes you have like false signals uh, with these RSI. Some people, what they do is during a downtrend, which we are in right now, which is kind of like downtrend / moving sideways. The RSI, they kind of, instead of 70, they go up to 50. Just show that here. So let me go back, turn on house moving average. Let me just change it to 21 for the sake of matching the Fibonacci. And click on these indicators. You can search it. You can say relative strength index. Then you'll see the RSI. You click on that. So this is RSI. Generally, it's default at 14. This is the range. The top is 0 to 100. It oscillates between the two. But this is at 30 and 70. So anytime it exceeds 70, it's a overbought or overvalued. The stock is overvalued, right? Sometimes if you have a Fidelity or any other platform, if you look at a ticker symbol, under the ticker symbol, it gives you Travis evaluation. So on the evaluation, sometimes like, for example, Microsoft, it's trading around, let's MFFD. So it's trading around, let's say 203, closed at 207. So Travis evaluation gave the evaluation of the stock to be undervalued because they gave a number as 214 as the right stock price at this moment. So they're basically saying stock is here somewhere, not here, overvalued or overbought category. So if it exceeds above 70, stock is overbought or overvalued than its actual price, because more people are buying and it pushes the stock price. And if it's less than 30, like here, then that shows that it's oversold, more people sold, and it's undervalued. The stock is undervalued. As I just said, Microsoft is listed like what, 214, 215. Currently it's 207, 208. So it's undervalued based on whatever the evaluation is. So how this works corresponding to this price chart. So just for a moment, forget about this blue line. That's Pulse moving average. Let me just hide it, you know. Right. So look at this, you know. This is S&P 500 futures. So the market from August 24th up till September 2nd. Look at this value. That's at 83.75. So it's definitely overbought and overvalued, above 70. So look at this. This is the last green candle before this downward trend. So at this, without even looking at Hurst moving average or the regular moving average or the exponential moving average, just by looking at this RSI, it's basically a red flag here that it's way above this 70. And if it goes above 70, it has to come down. It cannot go past 100. Look at historically, go back as far as you want. It just fluctuates between the two. So, all right. You see here as well. This is March. The RSI was like around 65 or something. The sudden news of COVID brought it down here. So coming back to September 2nd, RSI is 83. That's a red flag. Next day, boom, the correction happens. It comes down. It comes down, it trails. If it comes closer to 30, then it's oversold, undervalued, and then you see the uptrend again from 24th September. You see this? Even if I turn on this Pulse moving average, let's just see these two together, right? So here, the Pulse moving average showing a downward trend. So does this RSI, it's pointing downwards. And here on 24th, slightly moving up. If you go to the line chart, you can see the price going up more than the average. And even this value here is shooting up. Like at this point, it was 40. It came to 50. It's like going sideways here. You see the similarity between the two.
So, bro, Mohiuddin, what you said, basically this chart tells us if it is above 70, then if the trend is moving above 70, then sell the stock, if it is going less than or equal to 30, then buy the stock, and if it is between, then hold the stock.
It can be considered as that, yes, but the whole point is like, from these three indicators, what I want to show is sometimes like you start with a candle, you look at these three indicators to get a better understanding of how they sync with each other and kind of like react to the price index itself. But what I generally do is I don't just look at one indicator, even though it's giving like good enough information for me. But I still like to see here. You see there is room until it comes back and hits here. That's my point of selling. Because there could be a point that it may carry on still a day or two in a slight upward trend or sideways. So my request to everyone is just like, these indicators can be taken just by itself to gauge the market, but while you're starting, in the beginning, rely on all the three indicators at the same time, because that gives you a good enough information when all these three indicators are clubbed together. But the short answer is yes. If it's above 70, if you want to be cautious enough, you can do it. But there's a caveat to it. This is August 24th. That's when it hit 70. And this is September 2nd. You see 10 days.
It went sideways.
It went side and slightly above. Like if you look at like on the RSI, the difference is not much. But if you look at this price index, this is 24, right? Let me put the crosshairs here, 24. So if you look on the right side, it's 34.26, right? And you come here all the way to the top, it's what, 35.79. So just to give you an idea and measure it, let's say 24, right? So I go up to here. Going August 24th. How much percentage is that? It's 5.3%, right? So if you get out of the market too early also, then you lose this 5.3%. Or if you stay too late, but with this indicator, you're not really staying late. After September 2nd, kind of like, on the September 3rd, that's when it hit it, like, it nosedive. So at this point, even if you sell at that point, it's still good. Just look at you. Any questions on RSI? If not,
How do you enable RSI, Brahmoy?
so you go to FX indicators, go search relative strength index, click on this. Generally just hit on the star next to it, then it kind of stays in your favorite, like this.
The US is free version or paid version?
No, this is a free version. You can have 3 indicators on free version. If you need to add more indicators than 3, that's when you need the paid version.
So basically from the main screen, we need to go in chart, and then from there you basically go to RSI.
No, yeah, you need to select the sticker symbol on the left side. You see that? This one?
Yeah.
That's when you put in your ticker symbol. So let's say Apple. So it gives me Apple's price index.
For candle, what do we need to select?
Here, next to the duration.
No, from the FX. Do we need to select from FX candle?
No. Next to the candle, you see this drop down. Just select candle. That's it.
Oh.
This is a standard default. Candle standard default. If you want to go line chart, that's when I click on line, and that's when it just gives me a smooth line. It kind of does the same what an average does. Just like smoothens it, so as a line chart. So going back to the last, or the third indicator is MACD. That's moving averages, convergence, divergence. So it's a moving averages. It's a buy signal when the MACD crosses over signal line. It's a sell signal when the MACD crosses below a signal line. And MACD is a 12 EMA. As I mentioned earlier, EMA is exponential moving average. It's a weighted moving average. It's not a normal moving average. Again, weighted moving average is just more weightage to the price that's on either side of it. So 26 EMA minus 12 minus 26 EMA.